Boy, that time flies when you're having fun. Enough of the madness, though. Time to turn the television set off and time to roll those sleeves up and get back to work with me here this evening. That's right, it's Monday evening. It's March 25th, 2019. We're back from a weekend break. Back in the action once again for their nightly newsletter. My name is Joseph, and of course, this is your nightly newsletter. You know, I help traders find consistent, reliable, dependable, predictable opportunities using a simple three-step trading strategy that we execute together every morning in our trade room. But my job tonight is a little bit different. My job tonight is to identify the best of the best opportunities we see setting up for tomorrow, Tuesday morning's trading session. And we're going to cover oil, S&P, Nasdaq, gold, and of course, we'll wrap up tonight on that mighty euro. I'm going to jump in here tonight on oil here first. Oil is a classic range-bound market. Anytime I have a range-bound market, I always know I want to buy low, I want to sell high, and I want to stay away from that middle. But I'll tell you, there's one big clue on this chart right now that tells me that I really like that big round number at $60 a barrel up there. I'm looking for a nice two-legged move going up to that big round number. And so I'm looking for some opportunities here right now to be a buyer on the way up and then potentially a seller all the way back down. Got some short-term buying opportunities here on crude. We'll grab a look at that in a moment. And of course, potentially some long-term selling opportunities. We're going to dig into that crude chart in a lot more detail as we go into the video here tonight. Over on the S&P is range-bound, flat as a board. Again, anytime I see a range-bound market, I want to buy low. I want to sell high, stay away from that middle. And of course, as we go pushing higher here, I'm looking for some selling opportunities off that high, looking for some buying opportunities off that low, and we're going to break down how to buy it, how to sell it, and even how to trade some breakouts on this Emini S&P for tomorrow morning. Over on the Nasdaq here tonight, Nasdaq very similar to the S&P 500, range-bound market, of course, right? Relatively neutral momentum here right now. We're trying to buy low, we're trying to sell high, we're trying to avoid that middle on the Nasdaq. There's one big difference, though, on this Nasdaq, and that is this rising support trend line. That support trend line tells me I've got to be a little bit more choosy as far as which patterns we're going to look for here to sell off of this high. And don't forget, those rising support trend lines, they oftentimes lead to full-blown reversals. I'll talk about the sell side and the buy side here on the Nasdaq, whether we're buying low or buying those breakouts. We're going to dig into that in much more detail here as we get into tonight's video. And then how about that gold? Pretty easy chart here on the gold. Nice strong bullish trend here on the gold. And of course, one thing I've quickly identified here on gold tonight was this hidden channel. You'll notice as we come up, marking up those highs, right? I'm going to mark up those lows now, and you can see there's some great support levels down here waiting inside our battle zone. I want to be a buyer on a pullback, but of course, with that pullback, I've got 3, maybe 4 different buy patterns I'm looking for on gold tomorrow. If we get the pullback, if we don't get that pullback, obviously we'll plan here, right, for this market going sideways here as well. So I got a great plan on the gold tonight as well. Whether we go up, down, or sideways, I've got you covered there on the yellow metal. And then how about some euro here this evening? Euro, of course, strong move up into a trading range. It's a range-bound market. There's a bull bias, though, to this range-bound market. That tells me to use some key levels of support down here inside the battle zone. I'm looking for some buying opportunities here on the euro. If we get the pullback, I've got a handful of buy patterns I'm looking for down inside that battle zone. But if we go higher here, I'd be lying to you if I said I wasn't looking for a breakout right now, because we have potential to run all the way back up to retest Friday's high. I've got a very specific breakout pattern looking for up over those highs. And of course, we're going to put that together here as well in just a few moments. So euro is bullish into a range. Gold is pretty much perma-bull right now, trying to finish off that measured move. Nasdaq, S&P, and oil are all range bound. And of course, right, I love me some range bound markets. We're going to break this. We're going to put the plan together here in just a few moments. Before we jump in and put all the charts charts together for tomorrow morning's session. I want to make sure you never miss another great video. To make sure you never miss a newsletter, join our mailing list. Give me your name, your email address, hit that subscribe now button, and then make sure you check your email inbox, because I'm going to send you a welcome email, right, filled with a bunch of goodies in there so you can get the most out of our time together every evening on this newsletter. So to make sure you never miss a newsletter, join our mailing list. You can do that right on our blog here at Sideways Markets. I'll put all the links in the description of that YouTube video as well. Also, don't forget, tomorrow morning, 8 o'clock Eastern Time, we'll be in our trade room as we are every morning, Monday through Friday. I'd love to have you there with me. If you can't be there with me tomorrow morning, the next best thing is to grab all the charts that I'll be using tomorrow and throughout the day tomorrow. You can grab all those charts on your own computer. They're right below the video tonight here on our blog at Sideways Markets. Make sure you're here at sidewaysmarkets.com. I'll put all the links below the video on the YouTube channel, and of course grab all those charts right below the video. That way, if you can't be with me tomorrow in the trade room, next best thing is you can participate with the charts that we'll be using together with all of our clients. And don't forget, while you're down there, while you're down grabbing those charts, if you have any questions, comments, concerns, feedback, any constructive criticism, you know, guys, I am always listening. I'm always trying to make this newsletter a better place to learn and earn for all different types of traders. If you have anything you'd like to see me improve on, anything you love, anything you hate, I would love to know what you're thinking about the newsletter. Give me a comment in the comment section below. Any feedback, any criticism, any ideas for different topics you want to see me cover here on this video. And while you're down there in the comment section, give me a thumbs up if you like the video here tonight. And don't forget to subscribe to our channel. That way you never miss anything, right, we publish on our YouTube channel. And don't forget, guys, if you don't like the comment section, you can always pick up the phone and call that toll-free phone number in the upper right-hand corner. You know me, I'm a bit old school. I actually talk on my telephone. No robots, no call centers. Call me anytime in the office. I'd be happy to go over our entire three-step strategy, talk about what it means to be a client, and help you do this the right way, like we've done for tens of thousands of people here in over 11 years of running our trade room here at schooloftrade.com. All right, so now you know where to get more details. Below the video, above the video, join our mailing list, subscribe to our channel, give me a thumbs up if you like what you're seeing so far, and let's dig right in here. Let's do this. Starting off here with our calendar here for tomorrow. Tomorrow, of course, is Tuesday, March the 26th. Now, of course, we've got to take a bigger picture look at this. First of all, we're going into the end of the month here this month. Now, whenever we talk about the end of the month, what do we always think about end of the month? Volatility. Volatility is always something that we expect to see the dust kicked up right a little bit more as we go into those last few drops of any month. Now, going into the end of this month, what month is this? This is the end of March, and why that matters to us is it's the end of the first quarter, right? There are 4 quarters per year, 12 months in a year. Every 3 months, right, we get the end of each quarter. The end of the first quarter is notorious for being some of the nastiest, most volatile and unpredictable and irrational price action we get of the entire year. I don't want to scare us off because I'm always somebody who stays optimistic. My job every morning is I come out, I get to my desk, I see what my market conditions are, identify our strategy, and trade the strategy. So I try not to get too concerned about this because there's no sense in worrying about something that might not happen. But the bottom line is this: at the end of the month, we almost always see increased volatility. And of course, at the end of the first quarter, usually that volatility is at its nastiest. Now, does that mean tomorrow's going to be all hell? Well, probably not, right? But you do want to be aware of the potential for some real big neck-breaking moves here this week as traders are forced to participate, either getting in or getting out ahead of the end of the first quarter. The reason why this is so important is because a lot of trading firms, they publish their first quarter results, and they use those first quarter results to kind of, toot their own horn and attract more assets under management as they go into the end of the year, right? So as the year gets later, they're going to use these first quarter returns as their big benchmark to sell new clients into whatever fund, right, they're managing capital for. So this week is a big week. anticipating more volatility because of the end of the month and because of the end of that first quarter. We know that chaos could be kicked up a couple more notches as we go. And again, is it a reason not to trade? Of course not. Every morning we open up our trade room, 8 o'clock Eastern time, and we do the same thing we always do. We identify our day type, we find the analysis that works best for that day type, and we plan our entries accordingly. Now, talking about the news here for the rest of the week here. What's happening here? Well, tomorrow, we got big news tomorrow. It's pretty much all housing tomorrow morning. You got 8:30 housing starts. We got Case-Shiller, and of course the FHFA price indexes at 9 o'clock Eastern time. All housing tomorrow morning. Housing's a really interesting market because it has its tentacles in pretty much everything from the dollar to oil to the E-minis, even to some of the metals. So we know that housing, is always going to be a big potential market moving event, and we get some big housing numbers tomorrow at 8:30 Eastern time. As we look later in the week, though, we're going to have a bunch of news coming out on Wednesday. Wednesday is going to be all about the ECB. Thursday will probably be about China, and of course into Friday, into the end of the week, into the end of the first quarter, we got personal income. We got some more news out of China later on this week as we shift back to Beijing between the U.S. and China trade talks. So we got a busy week ahead of us. End of the first quarter, end of the month, ECB on Wednesday, and then of course China. Now that Russia is probably going to go away, You know what I'm talking about, China will probably take on, a new role here into the end of the week. We'll talk more about that as we know here for tomorrow. Be aware, though, be aware of the extra volatility. Be aware of the unpredictable nature into the end of the first quarter. And don't forget, I know these markets can be crazy sometimes as we go into the end of the quarter, but that's exactly why our clients love our trade room, because we get together every morning and we execute the plan together. Markets can be tricky sometimes, and it definitely helps to have somebody in your corner that you can lean on to make sure you're doing things the right way. Speaking of doing things the right way, let's jump right in tonight. Let's grab some oil, S&P, Nasdaq, gold, and we'll wrap up tonight on that mighty euro. The first thing I always ask whenever I open up a new chart is what type of market conditions are we dealing with? The markets only move in one of two ways. Either range bound or they're trending. And you can see here on oil with lots of overlapping candlesticks, flattening moving average. This is a range bound market. Now, I heard a lot of people tell me this morning, whether it be on Skype or email or on YouTube, that this was a bear market. I disagree. I think at this point, this market is pretty much a neutral environment right now. I don't think we're still dealing with kind of the tailwinds of that big bear move down. This has been balanced pretty much until midday on Friday morning. So yes, I will agree the long-term trend might be down, but the long-term trend could be up too. And so I try to focus my energy on the short-term momentum right now. And if you're looking at the trading range right now, this trading range is absolutely there, and it's more of a neutral momentum right now. I wouldn't go calling this a bull or a bear market at all. I would definitely call this a neutral market, and you can see us double topping and double bottoming. Now, anytime I see a range bound market, I always know the plan is pretty simple. I want to buy low, I want to sell high, and I want to avoid that middle, Stay away from that middle if at all possible. I'm also, when I'm trading range-bound markets, I'm always watching for those strong moves, because anytime we see a strong move in one direction, we expect to see a second leg. So for example, in this market, in this trading range environment, you'll then notice we see this real big, strong, bull move higher. You'll also notice they never pulled back to the moving average until just recently. And now anytime I see a strong move in one direction, I'm expecting to see a second leg going higher. So I have reason to believe right now that we're going to see another leg going higher here before we get a chance here to sell this market back down. It's a range-bound market. A little bit of bearishness, a little bit of bullishness, in the long run, neutral overall. But then we have a short-term bullish spike. Short-term bull spike tells me anticipate the leg higher. Once we get that next leg higher, then we can start thinking about being a seller back down into that range, or possibly, right, becoming a bull market up to retest those highs up around 60.39, right, from last Thursday, right? Yeah, last Thursday, not last Friday. So as we look at this, it's a range-bound market. I want to buy low. I want to sell high. I know where my measured moves are putting me. I'm going to clean this stuff off here right now. And let's talk about, right, how we can participate in this market right now. Most importantly, we know it's a range. So we know buying low, we know selling high. That's going to be where the bread and butter is on this market. However, with that strong move up, we also know at this point now that we should see one more attempt to go higher. The problem is, of course, we're right at the top of that trading range. Now, what do you think is going to happen at the top of that trading range? You're going to see sellers trying to sell this market back down in. So one easy pattern I'm looking for in the short term right now is to look for those sellers to try to sell off this high and basically fail. And to do that, how many times do you think those sellers will give it a shot? How many times would you try to sell off the high? Once? Probably twice. And that's what I'm looking for to be a buyer right now. I've got my strong move higher. I know it's a range. And I'm aware the best way to trade a range is to buy low and sell high. But when I have a real strong breakout like that, I can usually get a little scalp off of that second leg here. How do we do it? I'm looking for a very specific pattern called a nested failure pattern. I'm expecting to see these bears try to sell it back down. So to do that, I'm going to let them try once. I'm going to let them try twice. And then once I see those sellers trying once and trying twice, then I'm looking for that buy now, going back up, right? Second leg. Target, of course, at that point is that round number. So to be a buyer right now, I want to see those sellers try once, show them try twice. Once we get those bears trying once, trying twice, I'm looking to buy right into their failure. What's another way to be a buyer right now? Another way to be a buyer would be maybe we don't get that failure here. Maybe it's a breakout. If it breaks out, again, strong move up, now I have to be worried about that round number and that measured move, right? That measured move is going to be major resistance. So if we just break higher here, now what you want to think of is a trap pattern. One try, two try, but now we have to be a little bit more, selective, right? Look for a trap entry there. Again, that's because you don't want to get caught chasing it as it goes. If I can buy into the seller's stop losses here, 1 and 2, if I can buy into those stops there, I've got plenty of space now, right, to let that thing run. But if we end up jumping here, now I'm running low on space to get that round number, which we assume is the objective right now. So it's 1, it's 2, and it's trap. Traps are my favorite entry patterns when it comes to not having enough room or being concerned that you're buying too high. What's another way to buy this market right now? Another way to buy this market is we go back down to that low, right? If I'm wrong and this thing tanks here, moving average comes over. Let those sellers try to sell off the moving average. Once I see those sellers try to sell off the moving average, now I know exactly where their stops are. I can buy into those stops, and then I can also buy the pullback on the way back up to retest the high, right? Failure pattern into pullback pattern. So really, there are a handful of great, relatively easy buying opportunities right now. One is the nested failure pattern. Again, 1, 2, buying into the failure. 2 is the strong break with a trap. And again, that trap is necessary because you're running low on space. Target, of course, is the round number. Or don't forget, if we do see this market tag lower, let that moving average come over. Make sure we get those sellers to sell off the moving average. I'm buying right into their failure and then buying that pullback so we're not chasing after it from there. So 2 easy ways, well 3 easy ways now, right, to buy this market. Now, how about a bear, right? How do we sell this market right now? Well, trying to be a seller on this, first things first, I definitely need to see this market finish off that second leg. If we get that second leg, that momentum will be bullish. And we ultimately now look for the same basic pattern, but now in the opposite direction. Let those buyers try once, let them try twice, and I'm selling into their failure. You can see, same basic idea. Because that momentum is so strong as we go higher here, I'm hesitant. I don't want to just sell into it because it's too strong of a bull market. But it's a range-bound market, and we'll probably end up back into that range. So how do I do it? How do I thread the needle? How do I sell the high of a bear market, but at the same time, or sell the high of a range, but at the same time sell into a bull momentum move? That's why I wait for two. One try for the buyers, two try for the buyers, and selling it back down. Another one of those, right, nested failure patterns. Now, we may also see it end up really running hard here. It may go up to that big round number and same thing, right? 1, 2, and then back down in, right? So we may end up using that same nested pattern, right, as we go up to that round number. So don't be surprised if the buyers get what they're looking for, and then later on in the process, we can sell it on the way back down again. Don't forget, though, buy low, sell high, avoid the middle, right? Buy low with those failures, sell high, again, nested off to sell because of that bullish momentum, and do your best to stay out of the middle of that, right, of that trading range. Now, I've got a lot more I want to share with you here tonight, but most importantly, though, I want to give you a deeper dive into all those patterns I talked about, the nested, the two-try failure, the pullbacks, and the traps. The best way that I can give you a lot more details about all my favorite entry patterns is I'm going to drop a link in the upper right-hand corner here for you. I'm also going to put a big red button right below the video tonight on our blog here at Sideways Markets. Follow that link and join me behind the curtain inside the members section here at School of Trade for a complimentary trading course. I call it the free trading course. You can register for that free course in the upper right-hand corner or grab that big red button. And again, it will teach you all the small details that unfortunately I just simply can't go into all the details here on this evening newsletter. So join that free trading class, and I'll see you inside the members section where you'll learn all about the same strategy that we teach and trade together every morning in our trade room. How about some S&P right now? S&P, same basic idea here, right? It's a range-bound market. Now, this range-bound market is relatively wide. It's a relatively wide range. Whenever I have a wide trading range, I take the size of that range, I'll split it right in half, and I literally take that and I copy and paste it up, and that creates these zones overhead. So the first step is, once I know we have a range-bound market, if it's a wide range, right, this is a pretty wide range. Usually ranges are a lot narrower than this. It's a relatively wide range. Whenever I have that wide range, I take out my drawing tool, right, and I mark up the middle of it. Once I have the middle, then I break these into these small halves. And see what's happening here, right? There's the halves right there. And you can see I marked those up right down as well. So the bottom line is, it's a range-bound market. It's a relatively wide trading range, and because that range is so wide, I like to use 1/2 of that range as what I call range expansions. Normally, and if you watch my newsletter quite often, you probably know I like to use the full range expansion most often. I'll take that, right? I'll take that trading range, I'll copy and paste it up, right? There's the range expansion above, there's the range expansion below. I'm not going to say those levels won't work, but because the range is so wide, oftentimes we don't get to use those levels as much. What happens is we end up getting those little range, those kind of like little halfway areas, right? Acts as resistance, and of course usually acts as support down below. Range-bound market tells me buy low, sell high, avoid the middle. What's the best pattern on a range-bound day? How do we buy low? How do we sell high? How do we avoid that middle? In my experience, the two main patterns that you want to be watching for on a range-bound market are failures and pullbacks. In other words, as we go higher here, let those buyers try once to break out. Don't sell into it. Wait for them to try a second time to break out. Once I see these buyers trying once and trying twice, then I know exactly where they get in trouble. I know exactly where the pain starts. I know exactly where those stops are located. And once we know where stops are, then we can start looking to sell into those stop losses. So the most effective way to trade a range-bound market is to look for these failure patterns, right? Again, let the market try to break out. Let those buyers try to buy that pullback. Then right where you would have your stop losses, that's where I'm going to be selling right into that failure, right? This is a failure pattern here. We call these a two-try failure pattern, and you'll learn all about these in that free course I mentioned earlier. Now from there though, that's where the moving average comes in. So now we come back around, the moving average comes over, and that gives me one more shot here now to sell off that high. So same thing goes the downside, right? We go lower here. Let those bears try to run this price lower. Get that moving average coming over. Let those sellers try to sell off the moving average. Now we know where their stops are, and I can now buy into those stops. Don't chase after it. Buy the pullback instead. So again, I can buy into those stops. I can also, of course, right, buy that pullback as well. Now, what does a breakout look like on these ranges, right? I want to buy low. I want to sell high. I buy low using that two-try failure, right, into a pullback. We sell high by using that two-try failure into a pullback. But what does a breakout look like? What does a breakout look like? Right? My favorite breakout pattern starts off with a strong move. That strong move, anytime we see a strong leg in one direction, what almost always happens? Another leg. So once I see a strong break, I'm expecting to see sellers trying to sell back in. I wait for them to try once. I wait for them to try twice. I look for a trap, right? And I buy that trap low. One of my favorite ways to trade breakouts. Right? I don't just guess. I don't just buy the breakout because I know that most breakouts are going to fail. They will. Most breakouts, no matter how strong they look, most of them are going to end up coming right back into that range. That's why I always recommend if it goes up, wait for that second try and then sell right into that failure, or same thing, right? Goes lower, wait for that second try and buy into that failure. If I see a real strong break higher here, I expect those sellers to try once. I would expect them to try twice. And I like to look for those range breakouts with traps. At the very least, make sure you've got the sellers after a strong break higher. Make sure you get them trying once. Make sure you get them trying twice. And that goes for both sides of this, right? This would also be strong move down, buyers try once, buyers try twice. Again, strong move going lower. That's the key here. Buyers try once, right? Buyers try twice, and you're selling that trap right above that high, right, for that move going lower. Make sure it's a very, very strong breakdown though, right? Unlike, for example, back here, for example, right? Good effort, but not a very strong break out of that range, right? That's why those sorts of patterns typically fail, right? If I just barely come down here and go 1, 2, yeah, you're buying that right back up. But if it comes down and keeps going, right, then you got the 1, the 2, yeah, now we're talking. Now we can sell that on strength once those buyers try once and once those buyers try twice. So the breakout pattern here is relatively easy. Just need to see some good strength here. Stay away from that middle. 1 try, 2 try, failure, pull back, back in. 1 try, 2 try, failure, pull back in. Stay away from that middle. Watch those breakouts. And again, don't forget, I know these markets have been confusing lately in the month of March. It's the end of the first quarter. I've been talking about it every morning in our trade room. That's why our trade room is so important. Our trade room is a great place for you to come out, execute the plan with me, look over my shoulder. That way you're not doing it alone every morning, because I know how difficult it is to learn, right, while you're by yourself. So don't forget, tomorrow morning, 8 o'clock Eastern time, and we'll do it all together. How about some Nasdaq here? Over on the Nasdaq is very similar here to the S&P. We get a bear market, should I say a range-bound market. And again, there is a bit of a bearishness to it here. But after showing us just right running back and forth here, I think you'll have basically a neutral momentum right now. I don't think you've got much of any real directional bias at this point. It's been so long since those bears had control. And if you want to call it bearish, well, then you could easily call it bullish too before that happened too. So there's a lot of back and forth here right now on this Nasdaq. One of the things I'm really concerned about, though, is it's a range-bound market. Right? It's a range-bound market, and you'll notice, again, it's another one of those wide trading ranges. Now, with last chart, we talked about those wide ranges and how wide ranges, we take the midline and we copy and paste it down, right? That kind of creates these little quadrants there. We copy and paste it up. Okay, this is just what we talk about on the last chart, right? Anytime I have a trading range, a real wide range, I break it up into half increments and then I expand that range out to find levels of support and resistance from there. It's also important, number two, is that anytime a range is really wide, it starts to give us a lot of momentum. Let me clean off this real quickly here for us. You can see that measured move here, 1, 2, and 3. That gives me a level of resistance. But talking about these wide trading ranges again, though, and again, we've talked about how we break them into halves, right? How it's neutral at this point. Whenever I have a really wide trading range, I have to expect a wide failure pattern. Okay, here's a really good rule of thumb. Anytime you have a wide range, looking for a wide failure, right? A wide failure. You know, good example. Strong move up, wide failure. Right? Strong move up, wide failure. The reason why I say this is because a lot of times as a rookie trader, you might ask yourself, if we go up, up, up like that, right? Is that a failure pattern? It really all depends on the type of market that you're dealing with. You know, for example, if I have a real wide range of my chart, what happens is when the market rotates back and forth, it becomes really bullish as it goes higher. And that strong bullish momentum oftentimes produces a deep pullback and another leg higher. Then we see that move back down. That's the failure pattern I was talking about. Up, let the buyers buy it and sell into their failure. The reason why I mention this is because a lot of times what will happen is I'll see new traders do something like this. They'll take it, right, and they'll try to use this really tiny failure pattern here. See what I'm doing here? Yes, that is a failure, right? We go up, we pull back. Okay, I'll give it to you. That is a 2-try failure. The problem is, though, it's such a small little micro example of it that most traders are going to be waiting to do it again. That's the actual failure that you want to be using. Remember, wide range means momentum. Momentum means as we go higher, right? This is not your failure right there. Okay, you're thinking, let's go up, let's pull back, let's go up, and then we sell into it. That's the one big difference between, say, kind of your typical trading range, right? Your typical trading range, most ranges are pretty narrow. In a narrow range, I can go 1, 2, right back down again. But when I have that really wide range now, the key is momentum. Momentum can really build as we go back and forth. And so when I see that market running lower here, that's one hell of a bearish market at that point because that range is so wide. So instead of looking for this simple, failure back in, wait for it to get that second try. The bottom line is it'll be a wider second try. Wide range, wide 2-try. And again, you can see an example here, right? Strong move up, wide range, give it some time, and then sell it back down in. So as we go higher here, I'm expecting, first of all, with all of this bullishness, I'm expecting to see another leg go higher. Then I'm waiting to sell that market back down again. So we're seeing some wide ranges, and those wide ranges are really important clues because it tells me stay patient. Wide range, wide 2-try or wide failure, right? Strong move up, nice and bullish. Pull back and go, and then we start looking for that sell going back down into that trading range. So what do you think some opportunities here now we could use to buy it, right, or sell it as we're going higher? Well, what would be in a buy side right now? To be a buyer right now, we're really looking to buy the low of this range down here. That's where the easy money will be here on the Nasdaq. But what if we see this thing really jump, right? What if it really jumps? If it really jumps, because that range is so wide, we're going to probably be able to get that second leg, and I'll use a short-term seller failure pattern to do it. So I like the idea of a strong move up, then looking for a short-term seller failure to finish off that second leg. Then we can look to sell it back down into that trading range. If you want to be a buyer in the short term, make sure we get some strength going higher. Then we can go looking for that buy as we get that pullback. Now, from there, if we go back down to that low, getting back down to the low is relatively easy. We're looking for that same failure pattern as we talked about on the S&P. Don't forget, you've got that trend line down here, and that trend line coming up. What usually happens on these is you'll see the market go through the low, try to sell off that trend line, and that's where you know stops are. And now you can actually use that trend line to kind of sucker in those sellers. Again, let those sellers take it lower. Let them try to sell into it, right? Let them try to sell into that moving average pullback or that trend line I've got drawn in here, right? Let them try to sell into it. Once they sell into it, now we know exactly where those stops are. We can buy that failure pattern or we can buy that pullback pattern. So two easy ways to be a buyer here. One would be if we keep running up, look for that pullback, right? Looking to be a buyer on this. And again, my pattern on that will be a short-term seller failure. So if it does run higher here, I'm going to try to get those sellers to take the bait below the moving average here and literally look to buy into their failure. Because again, it might be a range-bound market, but because the range is so wide, one try, two try, we should be able to get that wide, right, second try here. That's one way to be a buyer, right, as we go higher. But again, you got to make sure you get that nice strong bull move before you do that. Or we go running back down here. Moving average comes over. Sellers try to sell, right? We buy into their failure. We buy that pullback, right, on the way back up from there. Those are relatively simple patterns. And again, I go a lot deeper into these patterns, and I'll also send you literally hundreds of examples of these patterns, right, from our trade room inside that free trading course. So grab that free course right in the upper right-hand corner, as I mentioned earlier, or grab that big red button below the video tonight, right, on our trading blog. Now, how do we be a seller on this? Being a seller on this can be tricky. There's two reasons why being a seller is going to be difficult. One is this rising support, and two is this wide range. Again, with this wide range, be very careful just looking for a very short-term failure right now, because with that bullish momentum, don't be surprised here if you see buyers waiting down here, like I mentioned earlier, waiting for that chance to buy this thing right below that 37.25, right? That little trap low right there. So what you want to wait for is to be a seller. I'm going to wait for that second leg. Again, I'm going to try to participate in that second leg. And then once we get up into that battle zone, we know we get the measure move up there. Now, because that momentum is so bullish, how do we sell a bull market? Very carefully, right? The nested failure, the one, the two, and the back down again, right? Let the buyers try once. Let the buyers try twice. Strong signal candle, and we'll pull the plug, right, and send this thing right back down into that trading range. All right, guys? Now, how about a breakout? What would a breakout look like? Breakouts are typically going to be one of two scenarios, either a 1, 2, 3 breakout, that is 1, 2, 3, a strong move up, a shallow pullback, and a follow-up leg, markup. Let's pull this back a little bit here, right? If we do get that 1, 2, 3 breakout, mark up that new high, mark up that new channel, find that channel low, and we're buying the low of that channel, right? How would a breakout look? Okay, one type of breakout pattern is we call the 1, 2, 3 breakout. 1, pull back to the moving average is 2, and 3 is that break off of it. If I see a 1, a 2, and a 3, right? 1 is a strong move up. 2 is the pull back to the moving average. 3 is that bounce off the moving average. What's really happening there is those are the sellers getting out of the way. Buyers will take control. If we do get that 1, 2, 3 breakout, look for that swing high. mark up that high. That becomes your hidden channel level. And now we know right where that sweet spot is. Bingo. I can be a buyer right off the low of that hidden channel. Another breakout I like to use is that strong breakout, one try, two try, and trap. Okay, very, very common and very reliable too. The key is strong move up, right? Strong move up. I'm not trying to get this pattern right around the high of that range. Okay, if we go up to the high of the range, we're looking to sell it, right? If we go back up, really punch higher here, 1, 2, trap and go. Yeah, that's right. That's a breakout. That is the momentum we need to feel confident being a buyer. So we keep talking more about these wide trading ranges, right? Wide ranges. Break them up into small half-size increments. Wide ranges. Wide failure patterns. Why? Because of the extra momentum that is wrapped up right together. And I'll tell you, if these buyers can get their hooks into this thing again, they get a great potential here. If they can get this run, there's a lot of potential up here, right, for a nice big short covering rally. And of course, we'll dig into that tomorrow if we get that big break higher. Let's keep going here though. Over on the gold right now. So now we go from range-bound markets now to a trending market. Got a nice big bullish momentum right now here on the gold. And you can see if I zoom out a little bit further here, right, they're just about ready to get that big measured move, right? If I zoom out a bit further here right now, you can easily see we got that big leg up. Right, second leg up, and we are really knocking on the doorstep right now. We're right into that big major measured move. So that's my big concern right now. My big concern here is that major level of resistance that is just a few ticks right as we go higher. And anytime I see the market running out of open space like this, I always know there's one type of pattern that I'm always looking to use, and those are trap patterns. So we'll dig into those a little bit deeper here as we go. It's really quite obvious here. It's a bull market with bullish momentum in a bull market trending day, not a range environment, trending environment. I want to use channels and I want to use measured moves. I want to find a support level to buy off of. So what I'll do is I'll mark up these highs, right? Line up these highs. That makes up my channel top. And what I'll do is I'll put that right at those lows, and boy, do those lows fit like a glove. You know, a lot of people would draw their trend lines right off the lows. I don't like to mess around with the old school types of trend lines. I like to find support levels by looking for resistance levels first. I draw my resistance trend line overhead. I bring that trend line now down at those lows, and that becomes a great level of support to use here. So we're bullish. I want to find levels of support to incorporate with my buy patterns. And then, of course, I've got my measured move, right? I've got two legs into this trading range right here as well. So we know we're bullish. We know we want to be a buyer. I want to buy as the market pulls back. What do you think here? What do you think would be a good spot here for me to buy here right now? Well, first of all, I've got the low of that channel, right? That's definitely a spot I want to be a buyer on. And also, too, look at the range, right? Got that range. What do? This is not a very wide range. This is pretty much your typical kind of narrow range here. So what do? We bring that range down. We copy and paste it down. Make it a little bit darker, and look where that all lines up right there. Range expansion level, battle zone, channel area, beautiful, beautiful spot there, right, to be a buyer here on the gold. So whether you want to call this a short-term trading range, I think it's a range up here. You know, anytime you see a market go this far without really pulling back, it's probably going to be a bit of a range-bound scenario here for tomorrow. And that's no problem at all, because that tells us exactly where that range expansion level is. That tells me now I want to buy, right, down around that buy zone there. I also, of course, have that, right, that channel, and I can buy off that, right, off that channel as well. What type of patterns can we use to buy this now? Now that we know where we want to be a buyer here, right, what are two ways in which we could be a buyer here right now? Well, how about this one? How about a two-legged pullback? One leg, two leg, draw that trend line down, use that trend line now as a key level of support, right, and buy it as we go. In fact, we might even get lucky and get a great combination of a two-legged pullback into a failure into a regular pullback pattern, two-legged pullback into a failure, into a pullback pattern. These patterns happen all the time. You'd be amazed how many times, right, we see these patterns here. Again, it's a two-legged pullback pattern off the trend line into a failure pattern back above the moving average, and then into a pullback pattern, right, as we pull back once again, so we're not buying high. Remember, it's very important. Remember, we got that range overhead. I don't want to buy too high here. If we don't get that, right, if we go sideways here right now on the gold, if it goes sideways, it becomes a pretty obvious range. It's a bull market into that range. What's the plan? Use that range expansion level, and it's a failure pattern. 1, 2, and failure. Let those sellers try once, let them try twice, and we're buying up into those stop losses of those bears. Also, too, don't forget, if we do go range bound here, what would a breakout look like? Right? Breakout, right? What would they look like here? What do breakouts look like? Well, first of all, the big one would be to the upside. There are two types of breakouts I'm looking for. One would be that strong break up, 1, 2, trap and go. Right, the 2-try breakout. The other one, of course, would be the 1, 2, 3 breakout, right? Not as punchy, but still as important. Mark up that high, mark up that high, mark up that low. That's my hidden channel low, and we're buying off the low of that hidden channel. And again, I know I'm going quickly through this right now because we're almost an hour into this newsletter tonight. I want to give you guys the basic levels I'm watching and some food for thought for you guys as you're trading tomorrow. And don't forget, right, tomorrow morning, we're going to execute this plan with all of our members in our trade room. So you don't need to do this alone every morning. You can come in and do it with me, right, in our trade room. So again, we know looking for that pull back to be a buyer here, right? I want to go 1, 2 up and over, right? Use that trend line. If we do go higher, it's strong break up, 1, 2 trap, or strong break up, pull back and go. That's a 1, 2, 3 reversal, right? Or 1, 2, 3 breakout, mark up that new channel, right? And we're buying those pullbacks from there. Just make sure, though, you stay out of that middle, right? Stay out of that middle. It does look like we might be going sideways here, right, for at least a little while here, right, on that gold. Be very careful buying high because you've got that measured move right overhead, right? Be very careful buying a breakout here because you got that move overhead. Speaking of which, how could we sell this market right now? It's not going to be easy, right? It's no surprise. It's a very bull market here, right? So we know being a seller on this is not going to be easy. There are ultimately two ways that you could sell this market here. One would be we take the range expansion, we go up, the buyers try once, the buyers try twice, and we sell into their failure, right? Let the market go higher. Let those buyers try to buy it once. Let them try to buy it twice. Then we look for that strong, right, that strong signal to sell back into the range. The reason why I wait for the buyers to try twice is because the market's bullish, right? I'm not just going to sell into the market going higher. I know that sometimes it works, but it's not reliable enough. I want the most reliable variation of this strategy, and if I'm going against the trend, I've got to make sure I really stay patient and let those buyers dig themselves in until they give up on it. If we go lower here, how can I sell going lower? Strong move down, right? 1, 2, trap. That will definitely be the most aggressive sell here, right, going down, just because you'll be walking right into that buy zone. So it's a much better idea. I would skip that one and look for the 1, 2, 3 breakout, or the 1, 2, 3 reversal. Once you see that strong move down and you can actually see them holding off that pullback, because remember, what's going to happen is you're going to see this. You're going to see it go down. You'll see those bears to the sell over it. Right? The bears will try to sell off that moving average. And of course, guys and gals like us in the trade room be waiting to buy right into it. Failure, right, into that pullback. So be very careful trying to sell on that pullback. Look for that strong move down. Look for that pullback to the moving average, strong move off of it, then mark up that low, mark up the new hidden channel low, and now you know exactly where that sweet spot is. and we're looking for pullbacks, failures, traps, anything we can do here, whichever pattern fits the best to sell off the top of that channel. And again, we'll go into a lot more detail on this tomorrow morning, right, in our trade room. And then, of course, last but not least here, wrapping things up here on the mighty euro tonight. I really appreciate you guys sticking around me here tonight on this video. I know this video lasts a long time sometimes. I'm covering a lot here with you, so I appreciate the time you're putting in with me. Got a bull market here into a trading range. Yeah, I do agree. There's the bear market before we went into that trading range, but short-term momentum, though, is bullish into that trading range. This is a relatively narrow trading range, so there's no real special treatment that we need in this euro market right now. What's the best way to trade a bull market into a trading range? We buy below that low. We go down, let those sellers try and buy right into their failure. So as we zoom in on this, again, I know I have a tremendous potential to run all the way back where we came from. We're going to hear from Draghi on Wednesday this week. So the euro might be in store again, end of the week, end of the month, end of the quarter. You know, as I mentioned, we're expecting to see some volatility here, some unexpected volatilities, right? Some kind of chaotic volatility here this week, because the end of the first quarter, but not to worry. We'll be there together in the trade room tomorrow morning, and we'll do it all together. So again, into that trading range, take that trading range, copy and paste it down, copy and paste it up, bingo, right? That gives me all my levels. Now that I know where my levels are, now all I'm going to do now is wait for that pullback. Couple different options here now. I can easily see here, 1, 2, go, draw that trend line over, get up and over and go, right? What pattern is that? We call those the two-legged pullback patterns, right? Those two-legged pullback patterns, because they go one leg, right, and they go two leg, then we get up and over and buy that dip from there, right? We're buying off that trend line with that two-legged pullback pattern. Or if we go running lower here, moving average comes over, sellers come in, right? We then have sellers on the moving average. Sellers try to sell off the moving average. It's not a bear market. I've got a hidden channel. I'm drawing up those right off those highs. Again, I realize that most of the old school trading books will tell you to do the exact opposite of this, but I find you get much better results. Finding support, start by looking for a level of resistance, right? Find that level of resistance, bring it down to that area as a level of support. Yep, and of course, where we're at right there is a great spot now to look for that failure into that pullback, right? And right back up we go again, right? Failure into that pullback, and then right back up, right, as we go. How will we break higher here? I'll tell you, there's a lot of potential here for those bulls right now, a lot of potential, but we got to be careful because we don't want to buy high. What's the best pattern for a breakout? There are two basic breakouts, right? One is that bam, big move up, strong spike up, one try, two try, failure back up. Let those bears try once, try twice. Right? That two-try breakout pattern. We'll talk more about these inside the free course I mentioned earlier. Or it's that 1, 2, 3 run. Mark up that high. Mark up that new channel. Find that hidden channel now, right? And we're buying, right? We're buying that dip to lower that channel. Where's my big target for the euro? Yep, big target all the way back up to retest those Friday highs. Again, if we can get that strong break, up 1, 2, trap and go, or up 1, 2, 3, mark up, right? Mark up that new channel, and we're buying off that new channel low. How do I sell this market right now? How do I sell this thing right now? Well, first of all, it's going to be very difficult to sell down here because you got that low from last Friday. This whole area here is going to be a lot of support here. So trying to be a seller, I want to go up because we're bullish. It's a 1, it's a 2, and then fading it back down. That is really going to be the only easy selling opportunity you have. And it's not going to be very easy at all because, of course, it's a bull market. So if we do see it run up here because of that bullish nature to it, 1 try for the buyers, 2 try for the buyers, and we'll sell it back down. The reason why I can get more aggressive with a failure pattern at the low is because you're going with that market's momentum. if the market goes higher and I want to be a seller, I've got to wait for those buyers to tire themselves out. Then I can sell into those stop losses. Because if you get in too early, what will happen is you'll be selling that failure and buyers will come in and make your life miserable. So wait for those buyers to try a couple times, then we'll drop it right back in, back down to that range bottom here. What a great lesson tonight, guys. We got the euro setting up here. We got the gold, the Nasdaq, right? The S&P, the oil market. Boy, oh boy, and we are right about to go into the hornet's nest as we finish up this month, this week, and of course this first quarter of the year 2019. Guys, I know I covered a lot on this video tonight, but don't worry. We're going to do it together every morning in our trade room, 8 o'clock Eastern time. Learn more right here on our website with our advanced membership package that includes a lifetime access to our trade room. And don't forget, if you're not quite ready for membership, grab that free trial right there on the homepage of the website. As part of that free trial, you're going to free pass, come out and join me as a guest in our trade room, and of course, you'll get enrolled in that free trading course to learn all the tricks we use in our morning trade room every morning. Guys and gals, hope you learned a ton. Hope you use it to earn a ton tomorrow. Hope I see you tomorrow morning bright and early in the trade room. If not, we'll do it again tomorrow evening, same time, same place. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.